Hello friends, November 18th, it's Patrick here. I'm at the THEbTEAM news desk, updating you on this bizarre, puzzling, kind of confusing, question mark inducing real estate market here in Niagara. Before I did this, I tried to keep some kind of variety, and I know laugh track was just probably played because I do a lot of stats stuff, but I was trying to, come at it from different angles. So I looked at the last 4 videos I did, and the titles were, I've got it written here, what exactly is going on out there? Niagara real estate market doesn't make any sense. Is the market soft, boring, frustrating? So lots of question marks. And then the 2021 roller coaster continues. So as much as I wanted to do something with some kind of variety, those same themes sort of are carrying on here in November, again, November 18th. And especially when we look back at the last month of October, every month has sort of, in a way, reinvented itself. Like the same general themes carry through, which is not enough homes and too many buyers. But in general, every month has sort of had a different flavor. We go back to July and August when things were a bit sleepy because, again, COVID relaxed. People went to their cottages and the ball game and the barbecue. And then post-September, if only a little victory, it was still a victory where we saw new listing inventory for the month of September, historically speaking, in positive territory, which we hadn't had a lot of. I think July and August were both 5 and 10% in negative territory. So September and the positive was a win. Hooray, right? And then so what happened in October? October just got the crap kicked out of it. So very quickly, just to give you an example, when you look at the Niagara region, the number of new listings for October 2021 were in negative territory. We're down 4% compared to what is normal for October, going back 10 or 12 years. Meanwhile, the number of sales were 34% higher than normal. So you've got -4 on the supply side, up 34% on the demand side. So what is the result of that? Average sale price for the month of October in Niagara, first place all time for any month at $759,000. So St. Catharines, Niagara Falls, and Welland, number 1, number 2, number 3, and the number of homes sold on any given year in Niagara. So we usually look at that, where those 3 cities go, that's where the market is. In general, you get the point. All 3 of those cities, same deal. St. Catharines was negative 11% on listings, up 26% on sales. Average sale price at $671,000, the highest ever for any month. Niagara Falls, down 10% on new listing inventory, up 24% on the number of homes sold. And so the average sale price, $714,000, first place all time ever. Niagara Falls has been wacky too. When you go back 4 or 5 months, the new listing inventory in the Niagara Falls has been worse than anywhere else, -10, -15, -25% month after month after month. Where other cities might be up 1% or down 4%, Niagara Falls was down double digits, really back to when we were all wearing bathing suits in July. And that compounding effect has seen real price escalation in Niagara Falls in the last 3 months to where the average sale price is over $700,000 for the last 2 or 3 months in a row. Which is pretty incredible, right? Welland, same deal. So not to go into it in great depth, but what has happened each month, what happened in October is why we're seeing what we're seeing out there. Here we are 2/3 of the way through the month of November. Similar trends, but not quite to that extreme. St. Catharines is trending to be down 5% in new listings, but up 17% in sales. So again, new listings down here, sales up here. Why is that happening, you say? The reason is simple, is we have all kinds of people from out of market. And I know the GTA buyer, quote unquote, gets a lot of bad press or gets some bad rap. It's not just GTA buyers, it's out of market buyers. And guess what? Spoiler alert, there's a lot of people in Niagara that are moving out east or moving to Quebec or moving up north or moving wherever, out west as well. So it's not like we're unique in that people are coming here and we're not going over there. There's just a general shuffling in the deck that's happening right now. And so it's not just GTA, it's Oshawa, it's Barrie, it's Kitchener, it's Hamilton, it's out of province. So this shuffling in the deck means that when somebody comes down here and buys something, they're not replenishing the supply side. So every time that happens, that's one less thing that's getting replenished back on the shelf, which sort of tightens the ratchet on all of it, right? So To put that in perspective, I looked at the last 7 days in the entire Niagara board just to see what's going on as far as out of market and local brokerage and all that kind of stuff. Because there is no data for the record. There's no button I can press that says there was this many buyers from out of market this month, right? So to some extent, we have to make some reasonable guesstimations on this. But here's what I looked at. Last 7 days, all of Niagara board, there was 184 new listings. There was 183 sales over that same period of time. That's super tight, right? Typically, you would want to see, 220 new listings, 163 sales. So there's still stock on the shelf. The market can still function. There's still, a churn that's happening, as opposed to, I'm going to put 184 Air Jordans on the shelf and 183 of them are going to sell. There's nothing left. As time goes on, that's a problem. And that's, really what we're experiencing here. But point of this is 183 sales in the last 7 days. 92 of them were represented, the buyers were represented by out-of-market brokerages. So whether that's in Hamilton or the GTA or Ajax or Oshawa, whatever, excuse me. So yes, you could make some kind of a theory that a buyer agent from Peterborough came down here and represented a local buyer, but not really, unless it's a family member. But in general, if somebody's driving down here from way over here, they're bringing a buyer from their market down here to buy, right? So again, 92 of 183 sales were out of market buyer brokerages. So the other half, local brokerages. So you could make a reasonable assumption that, or you could presume that 1/5 to a quarter to maybe a third of those buyers were represented by local brokerages were out of town as well, because we all do. We all represent out of market buyers all the time, right? So in general, you could make a reasonable guesstimation that out of those 183 sales, about 60 to 65% of them were out of market buyers. So aside from all the usual questions that we get in our day-to-day lives, never before have I been asked more about what's happening next, what's going to happen with pricing, where do you see the market going? Even amongst realtors, we hear conversations all the time where people are saying, what do you think is going to happen next with pricing? I don't know. It's crystal ball time. I'm going to take a guess at it, and then this video will live on forever for people to tell me I was wrong. But nothing is going to change. So if we make a reasonable assumption that new listing inventory plus or minus is going to maintain itself, because there's not 40,000 new houses getting dropped on the west corridor of the region, right? Is there? I don't think so, not yet. So as long as that supply side continues to maintain plus or minus the same numbers, if the demand side continues to be to feel this impact from out of market people who aren't replenishing it, as long as we have that same dynamic, these prices are going to stay exactly where they are. They might go up, they might go down a little bit, but in general, this is where the overall supply and demand interaction is pushing things, because as long as you have this many things available, but this many that want to buy it, you're going to maintain pricing. So external events, that's the only thing that we can't control, right? So things like the overall macro economy, global economy, whatever you want to call it. Interest rates, we know they're going to go up. There's going to be a expectation of an increase as we get into the new year, and then another one in the summer, perhaps. I hear different opinions and theories from lots of different people on that, but we know there's going to be an increase of some form, right? What does that do to the public sentiment? If somebody's coming down here because they're selling here and they're buying here, all of a sudden they're selling here and they're buying here, and now their costs are to sell here and to buy here. Is that margin still make it appealing or not? Does it make sense? All of a sudden it's like, you know what? Why don't we just stay put here, buy something in Florida or whatever it is, or stay put here and rent a place, whatever the case may be. Maybe the overall plan changes. It really depends on the buyer. Is the buyer out of a remote worker? Is it a retiree? Is it a young family? Is it a work relocation? Is it a whoever, right? There's all different reasons why people will make that move. And then over the, in the near term, over the winter, with so many of our buyers being from out of market, what if we get a significant winter, right? That house that goes up in the market, instead of this many people coming from out of market to look at it, what if now there's only this many and your pool of buyers has shrunk significantly? Do the prices maintain themselves? you could reasonably assume that they won't, because all of a sudden you don't have this many people around the table anymore. You've only got this many, and they're not going to feel that heat on them to make that big offer because there's less pressure, right? Leverage, all that good stuff. So external events, and again, over the near term in the winter, what happens with that, and then overall public sentiment. Those are the things you have to watch because again, as long as the new listing inventory maintains itself plus or minus where it's at, the interaction with buyer demand is what will determine pricing. And you can look at October 2021 for a prime example of that, where the new listing inventory went into negative territory and the sales spiked to 20, 25, 30, 35% higher than normal, depending on the city. And you can look city to city. There was a lot of record sale prices set in October 21 because of that exact thing. Okay, so that's the crystal ball. We'll come back and have a look at it and see what happens when we get into the spring. How that prediction plays out. But I think that's a reasonable guesstimation of where we're headed. So the next few months will probably stay largely the same. Once we get into the new year, when historically we always see a build of inventory from January through till May, where it usually peaks for new listing inventory, how that plays out against demand is going to be the interesting plot twist to watch. Okay, hopefully that was helpful. Any questions, you know where to reach us at any time. We're happy to chat. Okay, thanks so much. We'll see you. Bye.